Hi guys, good afternoon. I'm Karunya Rao with Manisha Gupta. We're here to give you an update on what's happening in the commodity space, and crude has dropped below $100 a barrel. In fact, it's all set to see the biggest decline in more than 2 years, biggest weekly decline. Tell us what's happening.
Oh, well, yes. First of all, I also want to tell you that March on record was the most volatile month for crude ever. I mean, we saw 140, we've seen 98 on the lower side as well. And every day has been a 5 to 7% of a move. And markets do tell us that it has been a lot to do with machine trading as well. But what we are seeing right now is clearly about US President authorizing himself that 1 million barrels per day will be released from the reserves, and that it will continue for the next 6 months. So that means 180 million barrels of a release is what we are looking at. And that is by the US alone. If the IEA meeting today also decides to join in some sense, if France, Germany, Russia also, not Russia, if France, Germany and other countries also do that, then we might be looking at a higher number here, and that's exactly what markets are looking at.
So the release that they could be looking at, and the one that's announced by the US, is it enough to take care of the deficit over the near-term scenario at least?
It sure is, because OPEC is increasing it by 400,000 barrels per day in any case. 1 million barrel per day is a bigger number in any case, and 1 million barrel is exactly what we're looking at in sense of 1% of the global consumption. So that is what we're looking at. So much so that banks like Society General and a couple of others also are saying that we could be looking at oversupplies in second quarter or even third quarter because of this. In addition to this supply release that US is doing, you also have Russia selling at a discount to its buyers. So there is supplies continuing into the market, and this deficit position that you just spoke about could actually turn into oversupply. So that's exactly what we're looking at right now. So this market changes on a day-to-day basis.
That's quite a change if that happens. But tell us more about Russia trying to give out its oil on a discount, and India is one of the takers.
It is. So the numbers are not too huge, because when you look at the overall quantum, we imported something like 12 million barrels from Russia in the last year. That is just about 2% of our overall requirement, and we actually produced more than that 2% within India as well. So in quantum, that number is not so huge, and that's exactly what US has been telling India, that you could continue to buy from Russia because you're getting $35 of a discount, which is huge. So that really brings us to $65, $70. That is pre-war levels of crude buying that we could do from Russia. But the US is concerned that we can't have over dependence on Russia, so we can continue to buy these kind of numbers, but not too much. But again, coming to the same point, the fact being that Russian oil is not getting out of the market. Remember, Russia's cost of production of producing 1 barrel of oil is $24 to $25. So even if they're selling it at 65 or 70 or 100 at the market prices, Russia is still making money out of it.
Does Russia still insist that they be paid in ruble?
That is something that is still under discussion. There's no clarity on that. But the whole fact that it wouldn't change so easily, there could be a US dollar or a euro there, or there could be some other barter system. I mean, there are so many things on the table right now. But the fact that India is buying, and even as we continue to buy from Russia, the global supply system is not getting into deficit anymore, because this crude will continue to come in, the US crude will continue to come in, and the OPEC is increasing production as well. So we are looking at much more supplies coming into the market, and with the kind of change in scenario where you have COVID situation in China, where the import has gone down and the demand is already at pre-COVID levels. We're not looking at a very strong demand from here on, but the supplies are increasing. So I think we are in for a couple of quarters where we could be looking at a consolidation. If you look at the City report, they expect prices at $84 by the fourth quarter of this year. Probus Securities, another Sydney-based company, they were saying that the prices could come down to $75 by the third quarter. So people have started changing their scenario and view on crude prices.
So I mean, who doesn't like a discount, right? I'm sure India is lapping it up.
$35 for $100, I love that.
Exactly. But when do customers or consumers like you and I finally see some respite?
Oh, well, yeah, that's a problem. Now, even as you mentioned, and you began by saying that this is the biggest weekly decline in 2 years that we've seen, but we continue to see price hikes because we are still adjusting to the higher prices. We didn't move for 4 or 5 months, so that's what we are looking at right now. Another couple of rupees of an increase, and then perhaps we are looking at stability, consolidation, and no more hikes for some time.
But will it really be worth the while? Because let's say it climbs up to 110 and climbs and retreats back to 100. Net, we're still paying a lot more.
Yeah, I think that's not going away in a jiffy, and that is something that a lot of experts are debating on. That when you call gas prices or petrol diesel prices in India as decontrolled, how do you hold it like that for 4 months and then you start releasing it? This is again back to the same way we were earlier at. So when you talk about partial decontrol or you talk about decontrol, we should actually let it be and let the consumers make use of it.
Okay, on that note, we'll wrap up today's discussion. Definitely things seem to be changing as far as the crude universe is concerned. We'll get you more updates daily as and when there are more developments. Thank you so much for tuning in.